Moderator and the past WRC Chairman. Thank you so much. May I now request C. Ashwini Sonawne to kindly give an introduction of our moderator before we start up the session. Ashwini, over to you.
Hello.
Good afternoon, everyone. CA Nagesh Pinge is an expert in ethics, corporate governance, risk management, and internal audit. He is a chartered accountant and law graduate from India. He has also completed executive education program from the Stephen M. Ross School of Business of University of Michigan, USA. In a career spanning 40 years, Mr. Pinge has worked with many organizations of repute. He is retired from the Tata Motors in the November 2016 as a Chief Internal Audit, Risk Management and Ethics. Prior to that, he was Chief Internal Audit of Reliance Retail Limited and JSW Steel Limited. Mr. Pinge has also worked for ICICI Bank and its group companies in the risk management. He is an independent director on many companies such as Goa Carbon, Arvind Fashion, MCX, Aditya Birla, Sun Life Insurance, and Utkarsh Small Finance Bank. Mr. Pinge is a past president of the Institute of Internal Auditors, India. He is a recipient of ACIIA Award given by the Asian Confederation of Institutes of Internal Audit for outstanding contribution in internal audit for the year 2017. He is also a recipient of ICA Award given by the Institute of Chartered Accountants for the year 2014. He is a regular guest speaker at many conferences on internal audit and risk management in India and overseas as well. His presentations are very informative and he shares his rich experience with its global perspective. Let's have a round of applause for Mr. Nagesh Pinge. I would now request Mr. Mrutuja Kachwala sir and Rudesh Mankani sir to give the memento to Mr. I would request Mr. Mrutuja sir and Rudesh sir to give the memento to Mr. Robin Banerjee. I would request Mrutuja sir and Rudesh sir to give the memento to Anjani Agarwal sir. I would like to request Mrutuja sir and Rudesh sir to give the memento to CATP Ostwal sir.
I can start? All of you can listen? Hello? You can? Okay. Good evening to all of you. Yeah, good evening. I think this is the last session if I'm not wrong, right? So we have a star-studded kind of panel here, let me tell you. And also to tell you, all three are chartered accountants. I am also one of them, the fourth one here. And we are, is like, you know, in our, in Purana or our thing, there is something called, Brahmacharyasva, then Gruhasthashram, then there is something called Vanaprasthashram, and there is something called Sannyasi. That's a fourth stage. Most of these people have done fantabulously well in their Gruhasthashram kind of thing. In fact, Ostwal Sahab and all of them are also doing that job, but they have almost, I would say, created a great organization. And by virtue of that, it is their giving time, as I call it, back to the society. And by virtue of that, they are almost on quite a few renowned board as independent directors. And I think this is something you must people know, that this is again a great profession, especially for those who are touching 50, 55 kind of things. Your experience counts a lot, and the corporates are looking forward to your people to contribute in a real great way. And I think there is no free lunch. There has to be a great value add on. Their experience, what they learned, and how are they going to do that particular part. And I think today we have probably one of the, I would say I'm really very, very lucky to get a great panel like this on that account. Let me introduce you Mr. Ostwal Saab. And Ostwal Saab is again a renowned person. He is from Chartered Accountant Fraternity. The Chartered Accountant, there is no question about it, from Taxation Fraternity. So it's, you know, we call him fondly TP Saab. And in fact, a lot of people call him Ostwal Saab also, depending on how friendly you are with them particular part. He runs his own consultancy firm on the taxation related part, be direct tax, personal tax, transfer pricing, business acquisition, merger acquisitions. I must say that he is one of the most popular person from our institute when it comes to taxation related part. In the first 3 recalls, his name will invariably figure in that particular thing. So great hands. I think we have got a wonderful person here in that particular thing. And of course, lot of accolades that he have won, like he's in that top 50 tax professionals in the world for the year. Lot of time he has achieved that particular thing. I don't want to spend too much time, but he was a member of this emerging issue task force set up by Ministry of Finance, Government of India, for recommending measures to Government of India on NRI taxation and issues related to international taxation. Also, he's on technical advisory group of OECD Paris. Like that, the list goes on and on. I'll not spend too much of time, but he was also on the Deepak Satavalekar committee of real estate on mutual funds. So a lot of work is happening on that particular part as well. So great person we have in this particular thing. And I will request him at later stage to speak about his own personal experience and what you can, most of these people are internal auditors. Maybe, I don't know how many of you are really practicing internal auditors. Very few, in fact, okay, there is half the things are practicing, internal auditors. And how many of you are from corporate life? All of them are most, that's again a big number on that account. So, these 2 people are the ones who are really contributing immensely to all of us as a chartered accountant. And unfortunately, or some people will call it fortunately, and that is what Ostwal Saab was saying. Invariably, a chair of audit committee, they look out for a bakra as a chartered accountant. And in that context, I think we are the first one, we are asked that way, do you have a vacancy for a chair of for an audit committee or not? And that's how these discussions start for the assignment related part. So Ostwal Saab is here. Second person I will introduce you is Robin Banerjee. Robin is, of course, a great person in his own way. He has played a great innings in corporate life. He was the Capri Hanses managing director and CEO, and now he's a chairman of Nuclear Research Private Limited. And of course, he had very, very wide experience. He has worked with HUL, Hindustan Unilever, he has worked with ArcelorMittal, he has worked with Thomas Cook, SR and Suzlon, if I'm not wrong, right? And I think I not missed out any big innings from that side particular thing. And now he is on quite a few big boards, and I'm going to request him also to talk about his own personal experience on this particular audit committee, kya hota hai kind of thing, that he will talk about it on that account. And he's also, I must say, he's a great writer. He has written 3 business non-fiction bestsellers, Corporate Frauds, Bigger, Broader and Bolder. That's one book. I've read some of the books. In fact, 2 of those I've read. Second one, Who Blunders and How, and Who Cheats and How. Very exciting kind of books, very easy to read. And I'll wholeheartedly recommend do a Robin Banerjee kind of search. You will get all the 3 books on that particular part on that account. And he's also with me on the faculty on the Institute of Directors. And I must say his lectures are mesmerizing to a lot of, these people who are aspirant, directors who want to be in that director's profession. They come for that particular thing. I think you also, like me, taken more than 100 lectures for all of them, right? So thanks, Robin, for joining us here. Then third one I have is Anjani Agarwal. Anjani is again a very famous personality. He had a great innings with Ernst & Young. In fact, he was a formal now a former one, but he was a senior partner in EY, and I know him from many years. He has been rendering a lot of services to me, be it in ICICI or in JSW or in even Tata Group and all of the things. Anjani and we have gone together on that account. He is also CIA, that is a Certified Internal Auditor, which is again, I don't want to compete here with the Institute of Chartered Accountants, but that's an international certification which is available for many people. And if you are going to, let's say, Canada, Australia or anywhere, because of your compulsions, because of your home kind of requirement on that account, these kind of certifications will give you a job and entry into anything very, very fast on that account. So this is again same thing. He has also gone through NCR and I think probably Cambridge, some of those two typical post-graduation kind of thing that you have gone through, right? Yeah. So that's what it is. It's a great 40 plus years of experience with him. All of us are in that way 40 plus. Ostwal ji probably is far more than that on that account. He's one of our senior members on that account. And now he's on quite a few boards. Some of the board numbers they have given, but I'm avoiding giving the names of the board, but quite a few reputed boards, all three of them are there. So I think, thank you very much for being with us in the Institute of Chartered Accountants. And I must thank Murtuza for inviting me here to introduce them and to, structure this panel on that account. I think audit committee is a very critical part of overall governance framework. And I think you are as strong or as you are as weak as your audit committee is. And that's what I firmly believe in that particular part. And so when somebody tells us that you become the chairman, that means that's a confidence they have in that person to get nominated to that position. And that's, according to me, is a real, I would say, mover and shaker of the corporate governance framework in that regard. So I think it plays a very immense and very, very important work on that account. And I think he can't be, and in fact, that's what I remember talking to Anjani also quite a few times. He is also on two Birla boards. I am also on two Birla boards. And nothing happens unless you meet Birlaji on that account. And I think when, generally you ask a question, and he also did that, and I also did that particular thing, what do you expect, an audit committee chair to do? He says nothing. He says, you are my eyes and ears of the organization. So I think this is what the real, I would say, crux of the role and chair of audit committee does. He has with him some 3 or 4, I would say, separate teams. They work separately with that particular thing. One of them, and which is very important, is internal audit. Second one is the statutory audit. The third one is the compliance kind of which works. And the fourth one is the CFO's function, which through, this IFC, internal financial control related part, these are the 4, I call it, the proper chair. If you want to really elevate that chair of corporate governance, you require those 4 strong kind of supports which holds that corporate governance upon that account. And I must say, internal audit is a very critical part of this particular thing, because there are 2 things, as I call it, 2 kinds of internal auditor. One of them I call it as internal auditor. That means the employees who are working with in the capacity of internal auditor, and I call them as external internal auditor. So they are internal auditor, but they come once in a way kind of assignment, and I can clearly say, sir, we have 50% of people. Some of them are going in a typical kind of, working for the accounting firms and working for the corporates indirectly, and there are some people who are working for the corporates on that account. And I think in that context, I would request all of you to understand how your report gets read and where it ends, and where it is shown that what kind of contribution you have done is a very important point. Each and every internal auditor must keep that back in your mind, because I've seen a lot of people, even in concurrent audit or anything of that kind, they say, we give it to the party, after that wo kya hota hai malum nahi hai. That is not suffice. According to me, you should get into that kind of things on that account. So we'll talk about a lot of things, but before that, I would like to hear, starting from Ostwalji, then Robin, and then Anjani. Anjani then conclude. Anjani, we have time basically. So I don't think you have to leave by 5 o'clock. So we'll do that thing. So in that order, Ostwalji, over to you. We would like to hear from you.
What is that you want me to?
No, you are on many boards. You are, as we rightly said, you are chair of audit committee on many companies on that account. And you got lot of companies which are publicly quoted, which are also funded by private equities. which are also probably owned by only promoters. They are private companies, small private companies on that account, but they require people like you on that particular thing. So there are three kinds of different kind of sets of companies that you are, you are a chair of audit committee or board member or chairman of something. So in that context, we would like to hear from you, what are your expectations in that capacity from our internal audit fraternity?
Yeah, thank you very much for asking. I'm audible?
Can you? Yeah? Okay.
First of all, I must thank the Institute for inviting me to be here in this my non-conventional topics seminar. I generally come to the Institute's all the seminars only on international tax. Even I don't feel comfortable coming on a domestic tax because you should not monopolize all the fields, You should give it to the others. In fact, these days even I am shading out. I want people, the next generation to participate, and in case if they need guidance, we are available. Rather than taking only mostly organizations want their program to be sold, and that's why they use the names like Anjani Agarwal or like Robin. So my name, like that. Now question is, what is the expectation from the audit committee chair or audit committee of an internal auditor? That was a question. See, unfortunately or fortunately, whatever you call, if you are a chartered accountant and you are on the board of a company, by first preference goes to you to become a audit committee chairman only. By and large, this is my experience, I found it out. By choice, if you don't want to become chairman, then somebody else can become chairman. Otherwise, invariably you are invited to become chairman of the audit committee. So it is not by choice,
yes.
It is by compulsion. Now, once it is by compulsion, then expectation goes up. From the management, from the investors, from the private equity holders and shareholders. Everybody want you to be very active, vigilant about your role, and therefore you have to play that role. Now, as an audit committee chairman, I have to ensure that the functions, when you appoint an auditor, internal auditor, first decide the scope. And that is the most important thing. If you decide the scope in X and Y and Z, they perform on that manner, the matter is over. But that is never expected. Now these things are changing. World over, things are now getting over into ESG and all sort of technological issues. And that also is required to be cyber security. All these things are required to be looked into and taken care by the internal auditor. And to some extent, audit committee also is responsible for doing all sort of a function, supervisory function. And therefore, our expectation from auditor is, when we expect something, we must first of all define it. And if we define it, then there should be a performance from the other side. And if there is no performance, then obviously you have a problem, and therefore you will have to change the auditor. This is what happens invariably. But my experience is, yes, in most of the companies where I am on the chair as an audit committee chairman, mostly it is Big Four who are the auditors, internal auditors, both. And therefore they have difficult time to deal with me as a chair of the audit. Honestly, let me tell you, and this is a frank and free opinion I am giving, when they come for a meeting, they have genuine difficulties. Because here they can't take things for granted. I am going to ask number of questions. Now, as an auditor, I have understood one thing. If so, why so? If not, why not? If you are prepared to ask these two questions, obviously everybody has to come prepared. If they don't come prepared, then they are bound to have the problems. Now, most of the time our experience is the auditors, internal auditors mainly concentrate on financial functions, which is not expected. Financial function, of course, they can coordinate with statutory auditor, but mostly reporting only on a financial. And I have not come across an internal auditor pointing it out very serious big issues, all small issues. So our expectation, we tell them, find out something important. Not find out something 100 rupees, 1000 rupees, 2000 rupees, or a lakh of rupees, or a 1 million rupees, write-offs, etc. No, nothing doing. Find out systemic errors, find out the operational problems, Tell me about your production and the loss of wastage and utilization. That will really, for example, I'll give you a simple example. In one of the real estate company, I'm on the board. When I asked what is the area, there was huge wastage of the tiles, and the tiles wastage was coming to around 15 to 18%. I said, this is too much. Then I asked chairman, can you not plan out your area based on the market availability of the tiles in the market? He says, sir, it is not possible. We have to design what public likes it. I said, correct. And your size of the project is so large, if you tell the manufacturer, he will make the tiles accordingly. Why you are not getting it done? And in fact, my past experience of 3-4 years, I saw 3 to 4% wastage. And other industries also wastage, I found it out. I said, this is too much. The internal auditor, we asked the question. They did not check up that problem. And therefore, if the wastage would have been reported properly, checked up properly, possibly saving could have been in few hundred crores. Well, this is the expectation as an audit committee chairman.
Good. Thank you, sir. Thank you. Thank you. Very good. I think indirectly it says that go prepared. And I remember that, different kind of audit committees. There are chair of audit committee will say, I have all the time, take your own thing, show me everything, I have no problems. And then there are other audit committees who will say, we are giving you 5 minutes, 10 minutes because there is a board meeting in next 20 minutes. So you tell me what you have to tell us on that account. So that delta thing, it is like going to Tirupati temple. Either you can see it for probably 10 minutes or sometimes you will be chewed out in just 1 minute kind of thing. So that kind of thing happens to audit committees. So it depends on Yatha Raja Tatha Praja. So if the chair of audit committee is like Ostwal Sahab, you have to go prepared. That's what first takeaways I can see, clearly see. I think second point that he has talked about is very important is material facts. I think you have to do value addition in your audit. And I think when you go to the audit committee, and this is what Ostwal Sahab is saying, I think we should know what exactly I am conveying and what messages I am giving and what kind of savings I am giving it to the organization. And I think if you are at the end of the audit report, you are not going to do that kind of work, I think you will be losing out on that particular part. And I think the third example, great example is talked about is wastage of tiles and all other things. Come on guys, why chair of audit committee had to do that kind of things? Audit committee, auditors could have raised these kind of questions and they were typical, I would say, basic hygiene related parts that could have been looked at it. So each and every industry has some typical kind of, I would say, important points that you have to look at it, which does, I would say, to the bottom line improvement. I think you have to start looking at it, can I do some value addition? So great sir, great kind of learnings for us on that account. Robin, can I move to you now? And you are anyway, I think you have ably demonstrated that in Capri Hands and then now you are working on quite a few other assignments on that account. Would like to hear from you, Robin, what exactly your way of perspective of looking at it. And I think what is really important is all three of them are chair of audit committees. So you will realize that eventually they talk the same language, but some different kind of perspective on that account. And that's again going to be a great learning for all of you. So Robin, over to you.
Thank you. Thanks, Nagesh. Thanks, Murtuza, for inviting us. Thanks to the Institute that we are all there to share our little experiences. I wouldn't say we have knowledge, but what we have is perhaps more summers we have seen from many of you. I would like to share something which is a little different, if you agree. I am, of course, happy to share the experience of company boards, what happens as audit committee chairs or independent directors or working directors. I want to talk to you about two things, two stuffs. I was thinking, what is it that one can make a difference so that you can take away some learnings when you move away? I understand this is the last session of a two-day seminar, and I'm still happy to see that many of you are still hanging around to hopefully get some learnings. Last week, I met the NAFRA chair, NFRA, National Financial Reporting Authority chairperson, Dr. Pandey. There was a CII seminar on financial accounting and risk management. It was a national seminar held in Mumbai. There was the NAFRA chair. There was an ICAI president. there was a managing director of Institute of England and Wales, and there was a chair of Deloitte. Actually, he was not the chair, he's a CEO of Deloitte. He just retired as a CEO. I think this month he's retiring. So this was a fairly high-powered panel discussion, where I happened to be representing the CII, and I was a panel chair. Why I'm talking to you about this, I learned something phenomenal from the NAFRA chair's presentation. And I want to share it with you, all of you, because I think NFRA affects every one of us sitting in this room, each one of us. And we are somehow not discussing NFRA. It has come into existence 6 years ago, as you know, 2017. And they are also learning, and we are thinking, NAFRA, ICI is bigger. No, we are not interested in NAFRA, and that's not true. NAFRA is our regulator. We better accept it and move forward. But that's okay. While during his presentation, he said certain things that I want to share with all of you. I think this is a good knowledge. He said that ecosystem of corporate governance has 5 layers. The layer number 1 is company management, the corporate management. They are primarily and first port of call for corporate management. कुछ कुत्ता बिल्ली चूहा होगा तो company corporate management का responsibility है. That's layer number 1, no discussion. Layer number 2, independent directors. They are the layer number 2 of the ecosystem of corporate governance, a 5-layer corporate governance ecosystem. Amazing, I've never heard it before for the first time, so I wanted to share with you. Third, the auditor. You will say, oh, is it third? Internal auditors we are discussing. He meant statutory auditor. He meant the auditor who is signing that piece of paper based on which NAFRA takes action or does not take action, because that's their area of competence. Third layer. Fourth layer, investors. The fourth level of governance, investors, because they ask questions, but they are not corporate management, they are not independent directors, they're not the auditors, they're the fourth layer. And the fifth layer are the regulators, which is NAFRA, ICAI, SEBI, and MCA, Ministry of Corporate Affairs. As you all know, MCA affects all the organizations, all the companies, because each one of us, private or public, we file a piece of paper in MCA, if he has doubts, then would either call SEBI or they will tell NAFRA nowadays. This is the 5 layers of corporate governance. Wonderful exposition of understanding of the ecosystem. Today, we are discussing internal audit and the future. Where does internal audit fit in? Which layer? Which layer? 1, 2, 3, 4, 5. This is not a classroom, so therefore I'm not going to ask you questions. Ladies and gentlemen, internal auditor fits in layer 1. And we are not in layer 3. We are the management. We are internal. We are the one who runs an organization. And we are the one who has to give the authenticity that everything is fine. So this is one thing I wanted to explain to you, the thinking of the NAFRA sitting chair as to what he believes is the ecosystem of corporate governance in the country. I told you I want to talk to you about 2 things. One is this one. And the second, and I could see half of you are working executives, half of you are practicing internal auditors. I could see that here, almost 50-50. Wonderful, that is. Although we are 4 lakh members, I understand 1,50,000 of us are practicing, 2,50,000 of us are serving, but here it's almost 50-50%. That's very nice. In this ecosystem of internal audit, ladies and gentlemen, what we are trying to figure out as a statutory auditor or an internal auditor, as a statutory auditor, what you are figuring out, the financial results are true and fair. This is your primary concern. But as an internal auditor, ladies and gentlemen, you are concerned with the Section 447 of Companies Act, whether there is a fraud or not. This is the responsibility which we have. So fraud is the area of concern. primary area of concern. In fact, if you look at the NAFRA chairs, NAFRA's expositions, recent notifications which they keep on issuing, NAFRA always talks about two: auditor, fraud, auditor. These are the two words he always talks about. Sometimes he talks about independent directors. Now, when we talk about fraud, ladies and gentlemen, we are all internal auditors, most of us are. There are two types of frauds. There's a micro fraud, the fraud where the cashier is running away with the money, the purchase manager is taking bribes, in the night the scrap material is going out as scrap. This is micro fraud. Four eyes principle, internal auditors should be able to figure it out. But that's not where the big money goes. Ostwal sir was saying, you are talking about 1,000, lakhs, millions. I'm not interested. Tell me the big one. Ladies and gentlemen, if you're talking about the big fraud, it is a macro fraud. Macro fraud which is not these internal issues, but structured by the chairperson, the management, perhaps by the board. This is the macro fraud. The biggest fraud in the country so far is APG Shipyard. Biggest fraud, 23,000 crores. 23,000 crores. Yes. 28 banks. Gone. Who structured it? Internal audit? Who structured it? Management? No. The owner. The owner structured it. 23,000 crore, you can go back and see in the Google, it's all there. If you see these companies, highest sales in 2009, this fraud took place between 2005 and 2010. The fraud took place, and the company ran away with the money between 2011 and 2017. 2005 to 2010 fraud took place means they drew money from the bank as debt for the purpose of building ships. This company's highest turnover so far in 2009 was 1,800 crores. Sir, 1,800 crores. The highest profit declared so far is 245 crores, 250 crores round up kar lo. Highest. This company's existence has been there for the last 50 years. This fraud took place, the debt was drawn between 2005 and 2010, I told you. It is only in 1 year the company had an 1,800 crores turnover and 250 crores of profit. On all other years, the turnover was 1,100 crores and always incurring losses. How on earth did they get a 23,000 crore debt? With all my knowledge and experience, I cannot find the answer. And this is called macro fraud. What was the responsibility of the internal auditor? Was he responsible or she responsible? A quick one more example I want to tell you, because stories makes us stick and hopefully change the perspective in some way. The second largest fraud in the country was Nirav Modi fraud, which everyone has. APG Shipyard, I don't know how many of you would have ever heard of it, the largest fraud. The second biggest fraud is Nirav Modi fraud, 14,000 crores over 7 years. We are talking about Nirav Modi of 14,000 crore. Sometimes it says 12,000, sometimes it says 14,000. So it was a 14,000 crore fraud. Now what happened? Where was the statutory auditor? Where was the internal auditor? Where was the RBI auditor? What did they do? They got letter of comfort, LC actually letter of credit ही होता है, as you know letter of comfort LC होता है. 7 years, 14,000 crore, हर month में एक करके LC, 150 LCs they got. No security, no mortgage, nothing, no hypothecation, no security whatsoever. This is the fraud where the internal auditor went to jail. I wanted to give you this story to tell you that we, the internal auditors in the ecosystem, even as per NAFRA chair, we are in layer 1. We are definitely primarily responsible. And there are two types of frauds, micro and macro. We spend a lot of time on micro frauds. Ladies and gentlemen, there are structured frauds which are going on in the country and the world. Please focus on the macro ones. That is where the money is. Thank you.
Thank you. Thank you, Robin. I think you've given a great kind of, I would say, value addition to all of us on that account. I think he has put you into what they call third line of defense, right? As an internal auditor or auditor on that account. So, but he has also added on fourth and the fifth kind of things on that account. Strictly speaking, I think we are, as internal auditors, are in between the management and regulators and also the stakeholders and the shareholders on that account. So that is one learning. Second part is, I think, frauds related part is a very critical kind of things on that account. And I think at that point of time, if I think just I'll take 2 minutes so that I will all of us will understand this particular part. There is one great book written by a lady called Margaret Hefferman. It's called Willful Blindness. That's a great book which is written on that account. And this, this particular lady was a script writer and she was writing many scripts for BBC. Around 2009, and this is something which is very critical, is equivalent of, in fact, I am rejoining, I'm sending a rejoinder to Robin's thing on that account. She was told, come on lady, you are going to have great time. Why? Because around that time, Lehman, Wells Fargo, a lot of things like Enron, a lot of things had happened on that account. So she was told you can write some 3 or 4 simultaneous scripts and really make good money on that account. So she was all excited, did her own research. And then she realized that in that there is a huge similarity. Everybody, including the so-called experts, the economists, ordinary citizens, virtually everybody, and I think probably all of us are in that typical thing where there, when Harshad Mehta scandal took place on that account, all of us are aware that there is something wrong. UTI iska price बढ़ रहा है, ready forward is happening, then a lot of banks are giving their ready forward kind of certificates. कुछ चल रहा है, but nobody wanted to talk about it on that particular thing. And this is what that lady calls willful blindness. It's a refusal to pay attention that happens to most of the people on that account. And in fact, in that, she says that, and this is something which is given as a typical thing, she has written more for the accountants and auditors. She has written there saying that, we need to know that business collapses are invariably preceded by a long period of 3 things. And this is where I am just echoing what Robin has said. Clean audit reports, both statutory and internal auditors, they say there is nothing wrong. We are all okay on that account. There are no major kind of observations. As we rightly said, micro and the macro kind of thing. They are all giving small things of micro related part. He has also said the same thing. Chota cheez dete, we forget the bigger one. The second one is nil fraud report. Absolutely no reports reported at all, no frauds happening. When you have a big organization, especially in a retail business, if you don't have frauds, there's something wrong with us. We don't know what we are doing. It's a willful blindness. And the third one is no whistleblowing complaints and no POSH related, POSH is that prevention of sexual harassment related things. And you as an audit committee member, I think this is where Robin will, this thing, and I'm also there on that account. If you don't see these kind of reports coming to you in any kind of examples, you can clearly see this particular thing, there is a willful blindness in this particular company. So I think in that context, great kind of learnings for us, Robin. Thank you very much for, taking us through this particular thing. Now I will move to Anjani. Anjani, all over to you. I think you can even what you can do, but you have time, 45 minutes, so we can do that second round of questions also on that account. So Robin, Anjani, over to you for your own experience on that account.
Thank you, the Institute, Murtuza, for having me here, and a lovely panel today, and great audience compared to the last time I was here. So I will sort of take a little turn and take you away from the deadly world of fraud and everything else, all the negativities. So let's look at some positive stuff. As internal auditors, whether in-house or a service provider, we know that there are risks in the profession, right? And there are responsibilities and increasingly more responsibilities, and you heard the NAFRA chairman's Robin relayed where the internal auditor stands, perhaps in 1 if you are an internal auditor, perhaps in stage 3 if you are an external internal auditor, perhaps, but no, we don't know how NAFRA on a given situation would sort of react. But let's look at it. If you're, as a professional, if you're taking all these responsibilities and on your stride, there has to be some excitement in life, right? There has to be, the role has to be powerful. We have to feel good about the profession we are in. People must give us respect, the corporates internally as well as the profession. Now, how do we elevate? How do we sort of achieve that place of pride? Now, my belief is, and I have seen through my earlier, sort of stint with a Big Four firm running this practice, as well as on public boards that I am on, we see different varieties of internal audits. So it all starts, the change, it all starts with the purpose. And I might sound a little bit theoretical, but I'm also learning as to how the internal audit world is going and where the expectations as internal audit committee chairs we have. So one is the purpose, start at the purpose. What is the purpose of internal audit? There are book knowledges, but let's be practical about it. Now, if we see ourselves as providing service to an organization, are we providing service to the organization itself? Who are the stakeholders? The definition of stakeholders is getting wider and wider, both for external auditor, for independent directors, as well as internal auditors. And the reason is the business is being seen as a part of the whole ecosystem, enveloped by the society and the ecosystem and the world at large. So if the system was to operate, there has to be trust and confidence in the whole ecosystem. And as a part of internal audit, our job is to provide, minimum job is to provide assurance such that there is a trust built in the whole system. Now, is it only about assurance, or are the expectations widening? Obviously, the expectations are going much beyond. So it says on assurance, not only on internal control systems, but assurance on governance and risk management and internal control systems. So at times, internal audit and all the discussion is around internal controls, but I think we have to rise our head and see how is the whole governance system working at the organization. So that's a bit different sort of thinking process that you have to go in. So both governance, risk management, as well as processes. Who are the stakeholders? Is only management the stakeholder? Are the shareholders stakeholder? Now, if you have closely watched the definitions in the Companies Act for independent directors, the stakeholders definition has been widened, much widened. And I would imagine soon enough, from a regulatory perspective as well, you will find ourselves in a position where we are accountable to a wider set of stakeholders, including the employees, the customers, the society, the lenders. And lenders already we are seeing internal auditors being held up for what happens in the organization, and we have seen some examples that mentioned. So at a wide set of stakeholders, the more stakeholders we are able to cater to, the more heightened position of internal audit in the eyes of all stakeholders we will achieve. So by purpose, we have to cover governance, risk management and internal control processes. By responsibility, we have to cater to address needs of wider set of stakeholders. It's not legalized yet, but if you see the last internal audit standards announced on 9th of January 24 this year by Institute of Internal Auditors, which will come effective 9th of January 25 as a mandatory thing, the stakeholders definition has been much widened. Third point, are you only an assurance provider, or are you doing anything more? How do you enhance your value in the organization? How do you see yourself to be value adding? No profession can survive unless we value add. So one minimum value addition is we help management build trust and assurance on how they're operating the business. But beyond that, the roles are expanding. So we have to be an advisor, and we are expected now increasingly to provide insight and foresight. These two words have been added. Some of them are already there, but they are being expanded. So this is pretty a challenging role that I see for internal auditors when they're asked to sort of provide advice, and I'll come to where you can provide advice, and provide insight and foresight. Now, very little in our past sort of roles on internal audit, we see ourselves being challenged to provide foresight. Now, what does that mean? Think ahead, both in terms of risk, governance, what must go right, what can go wrong, etc., etc. What are those objectives of the business? What strategies the management is playing out? What are those initiatives? How your job ties into the organizational goals. So that sink in is very important. And if you could either be only a sort of fault finder, rightfully so, those are valuable roles, even finding fault with the systems and making them right. But if you can step up yourself as bringing insight as to how things are to be, how things should be, and foresight. And more foresight, and these are needed because the management is challenged to sort of be very dynamic and always on their feet. So if the organization was expected to be dynamic, we as service provider, we have a stake in success for the organization and success of the ecosystem that the organization operates in. We have to be in step, at least in step, if not a step forward in thinking as to what foresight you can add. So maybe I take a pause here and then leave the rest to the next discussions.
Thanks, Anjani. I think you really talked about the positive side of the things on that account. Thank you. I think in short, he has said, look at the holistic way of looking at life. Don't just say, I am responding to management or the person who is appointing me. Probably sometimes these internal auditors do through co-sourcing on that account. So you just report to that on that account. But I think your report should be comprehensive is what you are looking at it. Do value addition. This is the second thing you talk about. And the best part is you talked about not just believe in insight, but also the foresight important. That means you just don't have to look at the history. It is like the IPO issue. You know, we are talking about it, the past figure doesn't show the future kind of things on that account. Believe in keeping your eyes and ears open and come out with a value add, great kind of value additions on that account. I think one thing I can tell you, and this is where I have two sets of people here, one internal auditor and one, as I call it, external internal auditor on that account. I think as audit committee, you know, we are supposed to be looking at their independence is what we are looking at it on that account. So one is independence, and also during, you know, I would say most of the public limited companies especially under LODR, it has been made mandatory for evaluation of internal auditors. Appointment is remuneration, and even when the exit is happening, the audit committee is supposed to play a key role on that account. So independence is the core of the matter on that account, and I think this particular person or that particular community of internal audit gets hooked on or, you know, tagged to you on that particular part. So can you tell us what kind of practices are there, and starting from Ostwal Sahab, then Robin, and also do the thing, can just give us some sort of understanding how to look at that particular thing on that account. So Ostwal Sahab, over to you first.
As I said earlier,
Yeah.
my experience is facing the internal auditors, which are all Big Four.
Yeah, okay.
So therefore, their internal robust system of the self-regulatory system itself makes them totally independent, and they have to certify themselves within the organization. They are independent.
Quality
Quality.
related, you are, okay.
So to that extent, the life becomes easier.
Okay.
Otherwise, honestly speaking, if the internal auditor is also a shareholder, is also stakeholder, then that matters, that impacts his, like statutory auditor, there is a clear-cut ban.
Yeah.
Internal auditor, there is no ban. Absolutely.
Yeah.
He can be a shareholder. But the fact is that I think we should take it from them. But here we need not say that if it is a minuscule percentage of shareholding, we should presume it is to be independent.
Okay.
It is not, we are stretching certain time the laws so much, then I think it breaks. Now, for example, if you say that internal auditor, there is internal auditor.
Yes.
He holds the ESOP.
Yeah.
He holds the shares. What restriction he has got? Nothing. So he reports. Does it mean that he is not performing his job? He is also performing his job. I was auditor of a largest corporation in India. and where we had internal audit, a team from the company itself. And that department of internal auditor had 300 people.
Okay.
You can assume what sort of a company it could be. And they were coming and performing their role, giving us the presentation every quarter. And more extensive, more robust than statutory auditor somewhere else. So therefore, they are having interest into it. In fact, this is something which I must tell you, our regulators are sometimes, want to go across the board. In USA, laws are different. The independent directors can be given ESOP.
Yeah.
In India, our SEBI regulators said, no, ESOP is no more required. Someday new chairman will come and he will change the rules.
Yeah.
What is happening somewhere else, you copy it here. What is today SEBI is doing? Just nothing but copying the laws and regulations world over and imposing these laws without application of mind, without testing the laws, implication of those new laws on the people here. And we blindly follow that. No choice. So therefore, there has to be path breaking. Internal auditor, if it is within the company, you are saying his independence and autonomousness is there because even if he is holding shares. But if it is a external internal auditor, he will not be considered independent if he holds some shares.
Yeah.
I think we are really making this mockery of the principles.
Okay.
Internal auditors, external also, if you hold the shares, because he is not certifying true and fairness of the statement of affairs. He is merely giving you internal report on the day-to-day functioning of the company and day-to-day measure, as Anjani also explained, certain futuristic option which he will look at in report. For example, in logistic business, now today some of the canals are closed, Red Sea canal closed, logistic is becoming difficult, and if you are getting the orders through electronic commerce, e-commerce, digital business, you have to perform, customer expect you to deliver the material in time. As an auditor, one has to contribute, one can contribute here.
Correct.
These are the areas where this is happening, so change your routes, change your mode of transportation. Auditor can find it out and tell us.
Thank you, sir. Thank you, sir. Yeah. I think, rightly said, this is a typical debate of ESOP should be given to the internal auditors or what kind of thing. That's certainly a great question that you have responded to. But I was more referring, and I think this is where Robin and this thing can do a supplement. In a game of chess, everybody is aware after the game chess is over, the queen and the pawn, they go back to the same kind of box. And this is where internal auditors are an integrated part of the system. They are all employees there on that account, as you rightly said. And this is where ESOP's related part can be an important point. But I think their performance evaluation is in the hands of audit committee. But in frankly speaking, number of times it's a management which eventually puts them in that, the performance bar. So wherever they will be figuring in on that account, we either endorse it or sometimes we may do it one-up kind of things on that account. So what are the good practices that you have? Robin, if you can really help us, and Anjani at later stage will come in handy. Yes sir, please sir, aap bhi bol sakte hain. Yeah.
Performance bar of an internal auditor is never done by the audit committee.
Okay.
But the matters are always debated and the management is present and they do their own performance evaluation.
Okay. Okay, but I think LODR is now insisting on, the audit committee to take the lead on that particular part. Yeah.
Have not come,
Yeah.
so nobody has told
Yes.
us.
Yeah, Robin, you want to just supplement something on that account? Right?
Sure. All of us here are internal auditors in some way or the other. Let me be a little frank, because I think all of us are adult individuals. We've all reached certain stages of life. Internal audit is done of an organization, which is companies. The bottom line is there are good companies and there are bad companies. The good companies are the one where internal auditor will be given a lot of importance. And not so good companies, they care a damn. Many of you definitely have audited and done good hard work. And then you want to know that what is the management doing about it? How many times have we been able to get the management saying, wow, internal audit, you did a wonderful job, everything we are going to implement? How many times have we encountered that the management did not give importance to your findings? Both must be true. And that's the dichotomy or conundrum our profession would perhaps go through forever. This good company, bad company, good boards and bad boards have in existence for hundreds of years, and it will continue to exist for next hundreds of years, irrespective what the statutory provisions can be. The institution of regulators, if there was one regulator 50 years back, now there are 5 regulators today. So the regulators are making the management, the companies, more governance-oriented. Our job, the internal auditor's job, is to ensure the governance is good, fraud is not taking place, money is not lost, and minority shareholders' interests are getting protected. Very important. Majority shareholders' interest is not what Companies Act 2013 talks about. The underlying essence of Companies Act is to protect the minority shareholders who cannot do anything. They have invested the money, and their money could be at risk. So the submission to all of us here is that if you are working with good management, very nice. If you're not working with good management, don't give up. There is no management on earth who wants to lose money unless there is a macro fraud going on. Let's say a company which is set on Ponzi scheme. A company which is the chairman wants to take debts and to money launder it. What can you do? What is the role we have at that point of time? And and most of the organizations will have a board, have a discussion with the audit committee. Many of us wouldn't even make a presentation to you go to the board, and as Nagesh bhai said, you know what, 5 minutes left, chalo jaldi karo, audit board meeting aa raha hai. That is reality. Audit committee being given importance, again, good company. Audit committee not giving importance, so-called not so good companies. So it's a Hobson's choice. It's a problem. The ecosystem is like that. My submission to you, all of you, is don't give up. Try your best. Most of the time, your audit committee chair would be a chartered accountant, to whom perhaps you will be able to speak on a more open fashion, and chances are that things will be taken care of. But I do know, and I have faced myself, that not so good companies or not so good boards do not give so much incentive or importance to the auditors, especially internal auditors. There you really feel bad. What the hell? I'm doing so much work, nothing is being done. Perhaps in that situation, some macro issues are taking place. Beware.
Thank you. Anjani?
Yeah. Okay, so independence. So independence is a state of mind, right? And if you look at the competencies, one is knowledge, then skills, and then behavior. So independent falls into that behavioral part. You know, you might be competent, you might be knowing what's going on, you don't feel it right, but do you have the ability to, and the professional desire and behavioral strength and to really call spade a spade. So I'll give you a few tools that we like to see or have sort of effectively thought they have brought in more independence. So one is, as audit committee, we spend independent time with the internal auditor separately in absence of management before the audit committee, at a time that is convenient to the internal auditor as well as us. Separate time. It's designed, management knows about it, there is no backroom meeting, so it's designed to operate that way. So that's one. Two, we look at what is the professional independence the internal auditor is portraying while in the audit committee. Are they really independently voicing the issue, or they are trying to run through and brush it under carpet as if nothing has happened? So that is a signal. Another negative signal is less time. In all our boards where at least I am engaged, I see increasingly more time being given to internal audit. And in fact, we have come to a point where we keep internal audit committee meetings on an independent day, so that the rush of attending a board meeting and going through all that in the morning is not on us. So sufficient time is given. It also starts with the scope. Right scope built in, it also adds to independence, because the scope, if mandated by management, that sort of curtails the independence of the internal auditor. Now, as independent director, if you have invested well in understanding the business, you as audit committee members would be able to understand what scope is designed to be there and what scope is being tried to be out of the scope. So we have a voice there. Internal audit performance evaluation, clearly audit committee's job. Administratively, of course, there is a management, so they will have a view, but it's a consultation process, and I am seeing an increasingly healthy dialogue. A red flag for me would be in-house internal auditor being there for 20 years, 30 years. That tells me a story that is this individual not mobile enough? Has the individual not added value to himself, herself, to be able to leverage the market opportunity that is there? So that's a red flag for me. At times we have tried to bring in a fresh blood into the internal audit team, if it was an in-house team. And if it is an outsourced internal auditor, we ask professional questions to the firms, Big Four or otherwise, doesn't matter, that are you clear as to your roles, responsibilities, and have you played to your standard? And the last point I would want to say is we like to have a grid of what comes to audit committee. At times we have seen behavior, chotu-motu things being filled into the internal audit presentation, but the real stuff not being there, as Robin was mentioning. So we have in a way casual pushed the management and the internal audit team to develop a grid as to what comes up to internal audit to audit committee. Now, if there is a laid down grid, the internal audit is taking responsibility of escaping something which has come to the notice, right? They can't say, okay, audit committee doesn't give us more than an hour, so we just picked up few things. They have to pick up the right things that are more important and of significance. So these are some of the tools, but end of the day, it is a state of mind. If the individual has a professional pride, professional integrity, and courage, and if the internal auditor has value added to himself, herself through the years, then I think there is enough and more market opportunities, and the person doesn't need to be sticking to that organization where the person doesn't have freedom.
Wow, great, Anjani. I think a lot of takeaways. One is, rightly said, pre-audit committees is something which is now an integrated part of life. Addition to that, there are one-on-one meetings which only independent directors, and that's something which is mandatorily prescribed by the banks and all other things. So I'm just putting it together on that account, whatever you have talked about. Yeah, you already spoken about that particular thing. The second one is scope, as you rightly said. In banking and in the regulated one, there is something called risk-based audit plan. So you look at what people have done in the last 2-3 years, and based on that, we look at that. So it's a great input from your side. Third one is performance evaluation, as you rightly said. I think it becomes our responsibility to see to it that we keep them at that level, so they are also getting the market price. Otherwise, we will lose on that particular thing. And I think red flags, as you rightly said, is where a person concern is there for donkey's years in that typical thing. It's a matter of concern on that account. So I think mobility or the transferability of the job is something which is encouraged. In fact, I think our friend Robin has worked in HUL. Apparently, I'm told nobody becomes a CEO unless a person has spent at least 3 years in internal audit earlier in life. So earlier, the better for them, because that's where they learn a lot in the process on that account. So these are some of the good practice on that account. And the grid, as you rightly said, the ABC kind of thing. A pointed observations are coming to the audit committee, B are just noted by the audit committee, and C is something given to the respective people. It's a great kind of thing that you have talked about. So brilliant kind of thing. And I think additional point probably you, in the time of shortage of time, action taken report, whatever that we are putting it across, the closing of that particular thing is also becomes a very important point of the thing. Great value addition, wonderful on that account.
I'll just add.
Yeah.
In audit committees, generally, sometimes we see the practice that the internal auditor only is giving management response.
Yeah. Yeah.
We have put a stop to it. The fact that the CEO or the CFO has to respond to the internal audit observation in the audit committee puts a lot of responsibility on the CXOs to really talk sense. Otherwise, the goody-goody language, internal auditor only set the point and management has done this, etc., etc. So we have put a stop to it. The fact that somebody has to say something puts a lot of responsibility back on the person. So that's the CEO, CXO.
Great. Thank you. I think we are almost like 4 minutes, 13 minutes. So I think we'll have to give some time. Would you people have some typical questions to ask? Or I just want to know. Yes,
like to
yes.
supplement what
Yes.
Anjani has explained. Why only CEO? In most of our companies where internal auditor makes a presentation and makes observation on a particular section, particular system, particular department, we call the heads of the department and make a presentation and tell why this is not done by you people. And we grill literally, and as a result, managing director sitting, CEO is sitting with us. He says, at times we find that the chairman, managing director say, please ask these questions. Some questions which we can't ask, you are asking is much better for us. And we are learning from this. That's a reality.
So you become like सास की मैत्रीण, वो मैत्री की करती है, so that बहू को वो बोल देती है indirectly kind of things on that account. Great. Okay.
And just to add one
Yeah.
more big point, it's not very often that you see CEOs, KRAs, or performance evaluation having an element of internal control assessments. We're trying to push that agenda very hard. In most companies where I am involved, we have managed to do that, put that on clearly. So audit committee's reflection on the internal control environment squarely sits with CEO and the CFO's KRAs. And that input comes from the audit committee chair. So that's all the more reason why they have to be sensitive, they have to be responsible, the auditee side. And at the fact that this is such a high important item, the internal auditor also is up to speed.
Great. Robin, you had to say something.
I want to say something, of course, not the audit committee and the internal auditors, but I want to say, although you may or may not ask this question, that what's the future? How do we pan ourselves for the future? One of the futuristic things which is an auditors are working on already, all of you, is a forensic audit, which is where you deep dive and try to figure out anything is going wrong. Many of you are experts, some of you are not. My submission to all of you is, if you are a chartered accountant, which I suppose you people all are here, please, for heaven's sake, pick up the forensic audit skill. This is going to be the future because more and more frauds are going to happen. If you see the quantum of fraud and the length of frauds which are happening today are significantly higher than what used to happen 10 or 20 years, 30 years back. That's issue number one. But issue number two, which is more important, please, for heaven's sake, understand artificial intelligence. What is artificial intelligence? It's all about data mining. What is it that you want to say in artificial intelligence? This is a bhashan. You must learn artificial intelligence. If you are an auditor, and if you can predict a fraud, just imagine the power you will have. You can ask any money, your fees will go up paramount. AI can now predict the future. I work in an environment on clinical studies. We are using AI to figure out that a particular molecule, which is a pharmaceutical molecule, Will it create adverse reaction on a patient ahead of time? We don't have to make that patient suffer for 2 years. And in 3 months or 4 months, AI is able to say that this molecule will not work. And that's what I want to tell you guys, that can you learn AI, use AI to predict a potential problem, potential fraud, potential misuse, a potential red flag. Forensic is past. AI can be used to the future. Look at it, ladies and gentlemen. To my mind, it's going to be a winning combination.
Thank you. Ostwal ji, और कुछ बोलना है आपको? Because you talked about the same thing.
I exactly was telling the chairman, saying that because of the technology, use of technology by internal auditors, really data analytics is done by them properly so that in each quarter they can review the whole year's function. It is not that though they do it on a test basis, but the test is extended to the whole year's data. And that gives little comfort to the audit committee, yes, total, the canvas covers everything. And if it is not, then we insist upon. Yeah. And at times what happens is that particular quarter, nowadays the practices are quite different. Each quarter they function, a particular function they will pick up and they will completely do it. Next quarter, thereafter nothing. We say no, repeat those performances in the subsequent quarters and also tell us what happened in the earlier period, what was the action taken and what is the now situation.
Correct.
That really gives a comfort.
Yeah. I think it's already said I'm over time on that particular part. I want to conclude, but I want to give some time for some people to ask questions. Feel free on that account. So we are there on that particular thing. Anybody has any specific questions to ask, feel free. Yeah, please. Yeah. Tell your name also, that will come in handy for all of us on that count.
Good evening, gentlemen and ladies and gentlemen over here. This is a question to Robin Banerjee. Sir, you referred to a conversation made by NFRA chairman where he laid down 5 levels of governance. The 4th layer being investors, and finally you have the 5th layer, which is the regulators, right? I am on the 4th layer, which is investors. How would you categorize investors who are themselves running the company, or in other words, family managed or promoter managed companies, and those investors who are outside the company but it is professionally managed? So investors being differentiated between these two. So family managed company or a promoter managed company, would it get covered under the 1st level, that is company management in such a case?
First level.
First level?
First level, very clear. Because the 4th level works only in few cases where there are PE investors, professional investors, and angel investors, of course engaged in venture capitalists. So that's what he meant as 4th layer is. Many organizations which have lasted for 10, 15, 20 years, then the investors are, if it's a listed company for instance, then as an outside, you are a shareholder, you're an investor, you will hardly be able to do anything. Then everything rests on level 1. This 5 levels, I think, covers almost the whole ecosystem. It can move up and down based on the life cycle of the organization.
Thank you, sir. Thank you.
Thank you. Yes.
My question is to all the panel members. Okay, it's not basically a question, but I need your thoughts on it. I'm Yogesh Singh. Basically, what I feel is, with my limited experience, is that since audit committee is there, we always feel that it's an external party, and we always try to manage the audit committee. We do not work along with them somewhere. So because there are other stakeholders in the company, as we talked about the independence. So I feel that the independence is somewhere hampered, and we still feel that the audit committee is an external party and we manage it. So need your thoughts about this, please.
You want to answer, anybody? Yeah. No, I'll think I can take on that. As you rightly said, basically, it all up to you how to take advantage of some of those typical meetings that are mandated by the regulators. There is something called one-on-one meeting, which is recommended in the banking related part, where audit committee entirely has to meet. Same is the case with a lot of other regulators like IRDA and all other things on that account. So that's a good practice you have. Then you also have access, because you are, as an internal auditor, you report it to chair of audit committee functionally. And administratively you work with the management on that account. So considering that, you have a right to approach, take time from the chair of audit committee. If you don't do it, I don't think audit committee chair will be after you on that account. So it's a, you have to take on that responsibility on that account. And I think in that context, I always remember, Professor, our friend Ramachandran, who has written that boards that deliver. A lot of good books they have written on that account. He said there are 3 kinds of boards basically. One of them is, he calls it as a ceremonial boards, which are more like, the cashew nut directors, as Ostwal Saab was saying during the conversation that we had on that account, where the chairman has already decided what all he has to decide, chairman not of the audit committee but chairman of the thing, and it goes through smoothly as if I know you, you know me, we probably come from the same fraternity, that kind of things are there. Never join a board like that as an internal auditor. That is what I am of the opinion. Otherwise, you have to come to the conclusion that that's the kind of work you will take on. The second one, which is there, is called liberated board, where the ex-CEO is also on the board, and he then keeps on telling somebody, and I don't want to say Mr. Dhoni is doing that today in Chennai Super King, but that is what is happening. He's there and he rolls up the things, he looks at everything. So by virtue of that, the CEO also works on that account. That's called liberated board, where a lot of discussions happen, but eventually what the ex-CEO wants to do gets done on that account. And the third one, and which is very critical, and I think you should work, and there are quite a few people, I'm told, we are coming from that kind of thing, there's something called progressive board, where they come together as a team. Directors, they have their own conflicts, but at the same time they agree to disagree on it, and they come out with a consensus what is needed, where you can do a great kind of value addition. And I think I have worked in those kind of organizations, whether it be ICSCI or at Tata Motors on that account, where audit committee had a great kind of say in the matter on that account, and my evaluation was done by them in addition to the management recommending it. And I still remember my standing going up by 1 cadre, because the chairman of audit committee felt I'm doing something out of the way on that account. So those are the companies where your internal audit will really get the thing. This is strictly off the record, I can tell you. Also additionally, one more point that I want to ask you, and this is where I will respond to you. There is something called push matter and there is something called pull matter. Audit committee has 2 ways of looking at it. Whatever comes to their thing without asking for is a push matter, which is a great thing on that account. So if you get all that information on your own, and that's what it is, then I think it's a great company and you are a great part of that internal audit thing. But if it is pull, like mere ko ye de do, then only you will get X, you will give only Y. That kind of thing is not good for corporate governance, upbringing up on that account. So I think considering all that, you have to also choose what kind of company that you are looking at it. Because sometimes people come to say, kya karenge sahab, lena pada. Lena pada for a professional like a chartered accountant is simply unacceptable. That's my view on that account. So I think with that, probably we'll end up with that session because we already exceeded our time on that account. Let me thank Ostwal Saab. He is one of our guru in taxation. Sir, great value addition on that account, sir. Very good of you to have come all the way. Robin is of course a good friend of mine, and so is Anjani on that account. So thank you very much. Great value addition, and I think it was a wonderful kind of session. So thank you very much. With that, I hand it over to you.
Thank you. Thank you so much to the esteemed panelists and the moderator for bringing out such good insights from the conversation we had today. From your good years of experience, we have of course learned a lot. We learned about material facts, understanding AI, concentration of a financial function, NAFRA, micro and micro fraud, a holistic approach, and the role of an audit committee. And I would also like to thank Mr. Nagesh sir for so beautifully and humorously taking us through all his questions and having a very interesting conversation overall. Can we have a huge round of applause for all the panelists, please? Thank you. I will hand it to Rajesh for the